Hello, good morning, traders, once again, and I invite you to a session which will be devoted to scalping. I say hello to our viewers on the chat. I say hello to our viewers on the YouTube and other medias. This session, especially on Mondays when markets are a bit boring, when markets are a bit, uh, let's say, ranging, we cannot find a direction. I think scalping is one of the best strategy for such days. Not every day we'll have trending markets. Not every day we have some volatile events. And Monday is especially one of those days when market is calm, when market is, some people say boring, is sleeping, but still we can trade. And the best strategy is a scalping strategy. I am using a special type of strategy. I am using a strategy which is combining price action with an indicator. So I cannot say that this is a naked trading, naked chart trading, but I'm also using indicators. And the main indicator, which plays the main role in this strategy, is MACD. So I need to say a few words to our viewers, especially those on YouTube, which maybe still didn't have opportunity to see my webinars, my live trading sessions. MACD is absolutely the most important part of the strategy. And when I'm scalping, when I'm really planning to take on a small piece of the market, maybe 5 pips, maybe 10, maybe 15, uh, we know that we must be very precise with the entries. So being precise means being very patient and waiting for the best moment to appear on the chart. And to find this best moment, to be very precise, MACD is very helpful. So when I'm scalping, I'm using low time frames from 5 minutes up to 1 hour, but I must say that the best are 5 minute charts for me and 15-minute charts. Of course, we need to have this MACD. I am using a double color MACD because I'll explain it very soon why double color has an advantage over the normal MACD. And I'm also using those two other indicators. Bollinger Bands is very popular. It's added to each platform, but not to each platform you will find supply and demand zones indicator. This indicator is uh, available for PC, for Windows system, but if you are trading on a phone, let's say Apple or some Android phones, you need to. I must say that you cannot get this indicator for those devices. So, but still you can scalp. You can still scalp if you have only those two things here. What is MACD? MACD is an indicator which is usually it's known as let's say one of the oldest indicators met on the markets. MACD, the name comes as an abbreviation of moving average convergence divergence. It may be science so complicated, so sophisticated, but to say the truth, convergence divergence, what does it mean? It means that if is the market moving together with the indicator in one direction, or is it moving in a different direction? MACD itself is built of two moving averages. And we know that the moving averages can give us a lot of signals. And moving averages can be dynamic support, dynamic resistance, or sometimes a moving average is just showing us what type of market we are at the moment seeing. Is it a bullish market or bearish market? And combining two moving averages gives us MACD. It looks like that. MACD is just a distance between two moving averages. I see some friends on the chat. I see Mr. Black, Mr. J, Mr. Danushka. Uh, welcome back. You sound a bit better now. Yeah, Mr. Black is uh, commenting. I had some problems with in the morning with my throat. I got a cold, We have awful weather here in Northern Europe. It was raining the whole weekend. It was windy and it was cold. So my throat is just an effect of this. What effect of being outdoors during that ugly weather. But I see it's sunny now. And I hope that the weather will come back together with my health. Uh, what I must say to my friends on the chat, we have a special session now because we are also transmitted on YouTube. That's why I'll be more detailed in this what I'm saying about speaking about this strategy because some people probably never heard about this strategy. So, but I think that after some 10 minutes of theory, we can go to practice, especially that I open a nice trade on dollar with yen just because of this what's happening on the 5-minute chart. You see, MACD was turning down. I open a short position and I'm gonna keep it for some time, at least 10, maybe 15 pips. I opened two positions. Must say it did it accidentally because I knew normally I open one position and I open the second position when the market goes in my direction. I pressed the button twice and I have to open position, but so now I have to leave it. But coming back to the idea of MACD, what is it showing? Well, MACD is showing us a distance between two moving averages. Someone would ask, how can it help me in trading? What is the meaning of moving average? Why this distance can signal that something is gonna change on the market? How can it signal me that it's time to open a trade? Well, you must remember that you must know that moving average is showing us what happened within last few candles. If you have a moving average of 12 period, it means that it's measuring, it's calculating what is the average value of last 12 candles closing of the candles or maybe opening. It depends on the type of the moving average. And this one, the blue one, is showing me what happened, what is the average of last 26 candles. So still there's a question, how can it help me to identify what's going on the market? Well, remember, last 12 uh, candles are, I would say, the fresh news. Uh, the average from last 26 candles, those are old news. It means that the new news are more actual than the old ones. So when I see that the new news are showing us that the market is moving more rapidly down, probably it will be still selling. But the distance between them is the most important because the closer they come each to another, it means that the market is turning around. I'm using, as you see, an MACD, which is a bit different than the original. The original MACD has one color. One color, it means that it's showing us either it's the size of this bar decides about when it starts to grow. When I see that this bar is shorter than this one, I can say that that the MACD is turning around, and probably it will also, we'll see it soon on the charts. But it's not easy just to be sure is this bar shorter or not. That's why I'm using the double color because the double color is signaling very quickly the change. I'm looking at the color and I see that, okay, MACD just turned bearish and it might be a signal maybe for a correction like this. So generally the values are the same, only the color is the difference between the original and the one I'm using. If you need it, you can download it from this channel. I have both versions. I have version for MetaTrader 5 and I have a version for MetaTrader 4. So you just need to choose the proper one. You'll find it in the message, which is on the top of the channel, which is under this address. Okay, and we must also remember that if you download the MetaTrader for MetaTrader 4, you need to and the correct settings. Okay, those are the correct settings for MetaTrader 4. If you download the indicator for MetaTrader 5, everything is okay. You mustn't change anything. Good. So now let's go to more detailed informations about MACD. MACD is showing me why I'm using MACD. MACD is showing, first thing is showing me the possible turn point, but it's also showing me divergences. Divergences are very important because when I see a divergence, I can expect the market to move up or down. So generally, I get the answer for the question where the market will gonna go. Is it gonna grow or is it gonna fall? And divergence is always when market is moving in a different direction than the indicator. Sooner or later, probably price will follow the direction of the indicator. This is the main idea of a divergence. And on this picture, you can see how the divergences are created, okay? So if you see a market making new highs like this, you have a high and you have a higher high. In the same time, MACD is creating a high, but the second high is a lower high. So this is the divergence that the market is showing different direction than MACD. And then when you see the red bar here, when the MACD starts to collapse, this is our signal that there could be some declines coming. And for us traders, it's very important to get this information. And it works on all time frames, starting from 1 minute, ending on monthly. But of course, each time frame has it takes a bit more time on a monthly to create such a pattern than on 1 minute. And generally, the idea of my strategy is based on those 10 points here. So my idea of my strategy is based on the moment when MACD is turning around, but of course not each situation will give us a good signal. But if we find a situation that candle is creating a maximum and after closing it's changing the MACD to bearish, this is for us a good signal. So this is how, so the strategy is very simple, as you see. It's just enough to control the price action and looking then at the MACD, because not each candle will do this. As you see, market was creating new maximums. Each candle was higher and higher, but it didn't change anything here. So not each candle creating a maximum is an opportunity to short it. We need to wait for the moment when it's closed and it's changed the MACD. So MACD is a kind of a filter helping us to avoid bad entries. So as long as MACD is bullish, I am not interested in shorting. But if I see a candle creating a maximum, which is really a maximum because there's no other higher prices here around, but MACD already gave a signal to sell, showed me that it's changing the direction. This is my entry. So as you see, strategy very simple. You mustn't have any, sophisticated indicators for it. It's enough if you have this MACD and uh, the moment of a change gives you a hint. Sometimes it will happen on second candle or maybe on third from the top. But the best setups will be, of course, when it happens on the first candle from the top. So the rules are very simple. Price makes a new high, latest third candle. I mean, because the first candle, it doesn't happen too often, but latest third. So let's say that this change on the MACD will happen on this candle, it would be still actual. But if it happens here, it's too late. For a scalp, it's too late. You are too far away from the top. And of course, it would be good to have a divergence. So this is a setup which is showing us a setup with a divergence. We have a maximum, maximum, maximum. We have three maximums on this chart. This maximum is created by a candle which is also changing the MACD. So this is the candle number 1. This is our signal candle, number 1. Here, this candle is number 4. So opening after the fourth candle change the MACD is really a late, very late signal. If it happens on the first, it gives a good setup. And of course, when it's a divergence, when we see that market is creating new highs and MACD lower highs,